Hey, hello guys, what's good? Can you guys hear me? Can you guys hear me? Can you guys hear me? Hello, can you guys hear me, please? If you can hear me, chat, send a comment. All right, great, great, great. We're gonna start in a few minutes. Yeah, today is going to be awesome. Are you guys ready? All right. Let's wait a bit for the rest to join. All right, awesome, awesome, awesome. Today is day 2 of the boot camp. Today is day 2 on the boot camp, and like on the outline, I told you guys we're going to learn a few stuff about trading and then what you should expect right from this boot camp. So we're going to talk about what trading is first. So what is trading? Let me type it out here. So I can be taking your notes. I prefer a black color. If you can't hear me at any point in time, just let me know, prompt me, and I'll fix it. I'll fix my microphone. So what is trading? Increase the font size. So about 20. 24 is fine. trading. Now, I know a lot of you have heard about trading, but you have no idea what trading actually is. You just see people showing charts, and then you be seeing red and blue. Red is when they are losing money, and blue is when they are making money. It makes you guys excited, yeah. Now, what is trading? So, trading is the buying and selling of financial assets, right? With the aim of benefiting from changes in their prices. That is trading, just that. So in trading, there has two components, right? There is a buying component. There's a buying component. Decrease the font size a bit. Size 18. There's a buying component. Sorry, there's a buying component and a selling component. So in trading, you are either buying or selling, right? So if you are buying, it means there is someone selling to you, and if you are selling, there is someone what buying from you. Now, what are we buying and selling? We are buying and selling financial assets. What are financial assets? We have forex, which is foreign exchange. Forex, the most popular one, right? Forex. We have forex, which is foreign exchange. So the FOR stands for foreign and EX stands for exchange. So it's transaction between two different countries. Yeah, transaction between two different countries, and you know the the system of transaction in every country is their currency. So countries trade currencies. Yeah, so it's either if US and then Ghana wants to trade, it's going to be the USD Ghana cedis. It's just going to be USD in exchange for Ghana cedis, Ghana cedis in exchange for USD, right? So that's what forex is about. And we also have indices. So an indices, right? It comes from the singular word called an index. Yeah, an index. Sorry, index. Yeah. So it's it's a measurement that tracks the performance of a group of assets, usually stocks, right, rather than representing one individual company. So what this means is that in index or in indices, yeah, we have like a s- number of assets, right? Then we group them together, and then we create one we create one asset out of the assets. We create one asset from individual assets. Yeah. So for instance, what I'm going to be talking about the most, the indices I'm going to be talking about the most, which is the NAS 100, right? NAS 100, NASDAQ 100, NAS 100. Yeah. The NASDAQ 100 is my favorite indices because that's what I trade. Yeah. And that's what you guys are going to be trading to. NAS 100 is a group of 100 US companies, right? So this indices comprise of 100 individual companies, right? And they have been put together to form one asset. So here we have Adidas, all the top US companies are here. Microsoft, you name them, they are all in this Nasdaq. That's why I love trading. Yeah, so that's what indices are. So in trading, what are we trying to do? We are trying to buy or sell buying and selling what? Financial assets like forex or indexes, right? And what is our aim? To make money. That's it. So trade is buying and selling of financial assets with the aim of making money or making profit when there is what? A change in prices. You understand? So if you want to make money in trading, you have to what? To make money, to make money, you have to what? Buy low, you buy low and sell high. Now, what do I mean by buy low and sell high? Now, if you are buying an assets, you need to buy it at a good price, right? You need to buy it at a good price so that you can sell it to make profits. So, for example, you want to start a business, right? When you are going to buy whatever you are going to use to start your business, you go for a wholesale price, which is lower than what you are going to sell to the people, right? So it's the same analogy here. If you want to make profit from an asset, right, you should buy when it is low at a lower price, right? And then you wait when it gets to a higher price, then you sell it. So when you are buying at a lower price, you are predicting that price has the potential to go up, right? To move higher than where it currently is, right? So that change in price is going to be your profits. The change in price is going to be your profit. So we make money trading by buying low, right? And then we sell at a higher price. If you want to sell to, you have to make sure that you are selling at a higher price. If you sell at a lower price and then price, if you sell at a lower price and then price goes higher, you are going to make losses. And if you buy at a higher price and price goes lower, you're going to make losses. You understand? So we simply make money by buying low and selling high. So you should keep that in mind. If you want to be profitable in trading, you should buy low and what? Sell high. Do you understand? Are you guys following? Oh, you guys should use the comment section if you are following and you are understanding it. Let me know. Type it. Do you guys understand? Can we proceed? Okay, great. Now we're going to look at some of the terminologies in trading. Right? If you are trading, at least you should know how traders speak and what some of the things they say mean. Right? So the first thing we are going to learn about is a, they want to learn about a pip. Let me make the heading terminologies. Right? So the first one is what? A pip. Now what's a pip? A pip is a standard unit used to measure small price movement, right? So to make it easy, let's take the this is called a chart, right? The Nasdaq chart. So let's take this whole chart as a graph. Yeah. So we have the y-axis and then we have the x-axis. Yeah. So it is price against time. Yeah. Now, if price is here, right, and it moves from where it is to another position, right? We measure this difference in pips. So just like we have centimeters and then meters for length, price also moves in pips. Do you understand? So if you want to know the pips for a certain price movement, you can just come here to where the ruler is, right? So it's always that's a measurement. Then we measure. So we want to know the whole pip from this for this leg, right? So tap on here and then we pull it down to the last end. Yeah, and you're going to see you see on your left that there is a minus 248.01. So minus price move 248.01 pips, right? Downward. It moved 248.01 pips. So that's what a pip is. A pip is like the measuring units for price. So whenever price goes up, is it's we call it 1 pip. If price goes up like um three 3 points from where it is, we see price has moved 3 pips. If it's four pips, 10 pips, right? So it's just like length. Whilst length is measured in centimeters, price is measured in pips. Now we are going to take our next terminology. We're going to take our next terminology, which is leverage. Now, what's a leverage? A leverage is, in a loose sense, a load, right, that helps you to control larger positions with less capital, right? So, for example, my broker's minimum deposit is $5, right? But look at the current price of NQ. This is it's in dollars. So the current price of NQ is 30,056.79 cents. 30,056.79 cents. Which means if you want to buy one if you want to buy this, you need if you want to buy something like this, you need about 30,056.79 dollars in your account to buy this. But how many of us have that kind of a money, right? So what's your broker? I'm going to talk about brokers soon. So what um they are going to do is that they are going to give you a loan, right, or a multiplier, right? So usually leverages are in times, right? Um, So it's like a leverage is like a multiplier. So they are in like times maybe 1,000 times 20 times times 10,000, sorry, times 20,000, depending on what your broker is willing to give you. You understand? So because your money is small, your broker will give you a leverage, so like a multiplier. So if you have a leverage of 10,000 and you deposit $5, it means it is the 10,000 times your $5. That is the amount of position you can control. So now you'll be controlling 50,000 worth of position. You understand? So you can. That's what will allow you to participate in the market like this. So leverage is very, very important. And as it helps you to trade, it also increases your risk, right? So you can also lose the $5 easily if your leverage is high. But I'm going to teach you guys how to manage all these, so you don't have to worry about it at all. You guys are good. Now we have a lot size. Lot size. We have what you call a lot size. Now, the lot size is the size of your position, right? Take into consideration your leverage, your lot size. So, lot size is literally how you decide the amount of money you want to risk, the amount of money you want to put in the market. Yeah, that's your lot size. Is that clear for you guys? The lot size is how you determine the amount of money you want to put in, how you want to expose your money. Yeah, so the lot size is what you are going to use, right? And it doesn't your lot size is not the only thing they're going to take into consideration. They're going to take into consideration your leverage, and then another things I'm going to talk about. Now, the next terminology is what we call margin. Margin. Now, for the lot size, right? We have um we have 0.01, we have 0.01 to 100 lots. Yeah, 0.01 to 100 lots. And then one lot is called a standard lot. Standard lot. One lot is a standard lot. So margin is the amount of money required to open and maintain a leveraged position, right? So you have you want to open a trade, right? You want to buy this stock. You want to buy this indices, NIOS, NAS 100. Even though there is a leverage, you see, you need an amount of money, right, for the to so that the leverage will multiply that money. You understand? So the amount of money that you need, right, with the help of your broker's leverage to open a certain position is what you call the margin. So margin is what you deposit in your account. The deposit in your account, or the fraction of the deposit in your account that you need to open a position and to also manage the position whilst it is running. That is what a margin is, right? Are you guys clear on that? We are gonna all right. We are gonna go. We're going to talk about our next list of terms, which is very important. We're going to talk about the stop loss. I hear a lot of traders saying, "Oh, I've hit stop loss. I hit stop loss today. I hit stop loss today." Right? Well, today we're going to understand what stop loss is. So, stop loss is basically an order, right, that is designed to limit a potential loss. In trading, no position is assured. It's a game of probability. So you should not enter a trade thinking that you are just going to win, or it's just going to be there is going to go great. Sometimes things go north, right? Sometimes things go south, rather, sorry, right? And when things go south, you need a helmet, and your helmet is your stop loss. So that is your stop loss is like an order that you give your the trader that, okay, if I lose this amount of money, I want to be out of this trade so that I can preserve the rest of my capital. So once you enter the trade, you set your stop loss. So stop the losing trade when it gets to this price. That's the command. You understand? And we also have take profits. As for this, every trader likes it. Take profits. This is where the money comes from. Yeah. So take profits is an order that closes a trade at a predetermined profit level. So we are basically telling the trader, oh, when I make this amount of money, I want to be out of the position. It's okay for me. I'm okay with where prices. I'm okay with the profit I've made from the change in price. So take me out of the trade and let me secure my money. I don't want my profit to be floating anymore. I want it in my account. That is what a take profit order means. That is what a take profit order means. Now, in trading, we have some terminologies that we use for buying and selling. We don't say I'm buying here, I'm selling here. Most of the time, we use these terminologies. We use long, and we also use shorts, right? Long, and then we also use shorts. Now, when a trader tells you that I'm longing, what does it mean? Longing means he's buying. So longing or buying. So from now, don't say I bought here. Say I'm in longs. Don't say I'm in a buying position. I'm in longs, right? You can also say buying, but traders prefer to use buy longs instead of buying, and shorts instead of selling. So if someone tells you that, okay, short this trade, it means the person is telling you to sell it, right? So long is for buys and short is for sells. These are the trading these are the important trading terminologies that you need to know. And we also have the last terminology that we are going to look about today. We are going to look at today, which is called spread, right? So spread, when you are buying an asset, right, it means you are selling from some. When you are buying, it means someone is selling, and the person has a price that he's selling the asset for. Yeah, the person has a price that he's selling the asset for, and and then the price that you also be buying the assets at, right? So the difference between that price is your spread. You understand? The difference between the price which the person is selling it for and the price at which you are buying it is the spread. And the uh, this is usually how brokers make their money, right? Now, we want to talk about brokers. Brokers. I'm sure you guys have heard of brokers a lot. Brokers, 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 brokers. What are brokers? Now, a broker is an institution that provides access to the financial market, right? So before you can trade, your broker is like the intermediary between the markets and you the retail trader. So the broker is like a bank. If you want to send money to someone outside, you need to deposit the money to the bank, and the bank will send the money to the person. So if you want to buy a stock or you want to buy an indices, what you do, you send a command to your broker will send a command to the market. So your broker will be buying for you and be selling for you. So when you want to trade, you deposit your money to your broker's account, and then your broker deposit money to your brokerage account, and then you issue your commands. I want to buy here. This might stop loss. This might take profits. Your broker will send those commands to the markets, and the broker will also give you the outcome. So if it's a winning trade, your broker is going to take the money from the market and put it in your account. So you withdraw from the broker's account. You understand? So your broker is basically like your bank for trading forex. So they are going to go. They're going to be your middleman, right? Kind of, because you don't have direct access to the market. We need brokers to be our intermediaries, licensed brokers. And speaking of brokers, we have one broker sponsoring this this boot camp. They are called Hot Forex Markets. I was using them. I was using this broker even before they partnered with me. Yeah, they are very good. They have low spreads, and then their withdrawals are instant. This week I've been withdrawing from them a lot. I had a good winning streak, and whenever I make profits, I withdraw my profits. Yeah, I'll teach you guys why. I'll tell you guys why. Um, on day 5, yeah, I'll tell you guys why. It helps your psychology and all that, right? And their withdrawals are instant. They are always instant. Their withdrawals are instant and very fast. It's a very good broker. So I'm going to they have the team in the WhatsApp group here. So I'm going to send a link in the WhatsApp group. You guys should use that link to create an account with them. If you have any issues or encounter any problem with the signing up, just send me a text message or any of the admins in the group a text message. I'm working direct. I have direct access to this um brokerage firm here. So any issue that you encounter with them, you just text me and I'm going to let them sort it out for you. That's the main reason why I'm using this broker for the boot camp, because I have direct access to them and they've been around for a very long time. They've been around for a very long time. Yeah, you can search about them. It's a very very good broker. So you guys should use the link that I'll send in the group to create the account. Right? I have um the team, the management of the brokerage firm. We have some of them in the group. They're going to be assisting you guys on how to create the accounts and all that. So you see them. They will have admins by their names. You can text them, or you can even text me. I'm going to help you create an account with them. You need to create an account with them to be able to trade. Yeah. All right. So that is what a broker is, and the broker that I'll recommend for you is HFM. So make sure you guys are using the links that I'm going to be posting, the links that I'll be posting in the group. Right now, if you want to trade, you need some platforms to trade, and I'm going to give you. I gave you an assignment in the first video, right? And it's going to be the same thing in this video. So you have to download TradingView. If the device that you actively use is your phone, you have to download TradingView. But then if you have a laptop, you can just go on the search engine and search for tradingview.com, and then you sign up for an account, because you're going to need it a lot. That's where we do our analysis. This is TradingView. Yeah, that's where we do our analysis and then everything. So TradingView platforms, trading platforms. So TradingView is where we do our analysis. TradingView is for analysis. That's when you analyze the assets before we either buy or sell them. TradingView. And then we also have MT5, MetaTrader 5. Let me just type it in full. MetaTrader 5 and MetaTrader 4. Depending on the one that your phone can run, right? I would suggest that you download MetaTrader 5 because MetaTrader 5 is an improved version or an upgrade of MetaTrader 4, right? But if your phone cannot run smoothly with MT5, you can also download MT4. And then we also have the HFM. So this for execution. MT5 and MT4 is for execution. Yeah. So these are execution. That's what you're going to be buying and selling. Execution. Right, it's for execution. And HFM is our broker, obviously. So they'll give you an account. They'll give you an account. You're going to log in the account in the MT5, and you're going to be buying and selling from there. Right. So the trading platforms, you have to make sure you have created an account to TradingView, and you have an account to MetaTrader 5, and an HFM broker. I'm going to send a video over the weekend on how to go about TradingView, go about MT5 and MT4, and then how to create an account with HFM broker too, so that those who find it difficult can just watch the video and then create their accounts. Now, I was talking about expectations, right? So, what are some of the things that you are supposed to be expecting? I'm going to start with the negative. Like, don't expect this. This is not what we are doing here. We are not here to like become rich overnight. It doesn't work that way. I had to trade for 3.5 years before seeing consistent profitability. Right? It's not an overnight thing. But if you give yourself full to it, you're going to make good money, a lot of money. Right? Just find what works and keep doing it. Right? So and you shouldn't expect um guaranteed profits that you're going to make profits every day. It has not happened that way, right? Even though this week it was a good week for me, I had 3 out of 3 wins. So I took a trade on Monday and Tuesday and then Friday, and all these 3 trades were winners, right? So it was a good week. This doesn't happen every week, right? Today was just a good week, and I took advantage of it, right? So we are not going to be winning trades every day. We are not going to be turning $10 into $1,000 overnight, but it's possible. But that's not what we are trying to do here. You can turn $10 to $1,000, right? But then it's not going to be overnight. And even if it is going to be overnight, it's not something you can do consistently because trading is a game of probability. And there is no secret strategy. I'm not going to share a secret strategy that never loses. Nope, that's what I'm going to do here. I'm going to give you guys a strategy that outperforms the market over a period of time. So there are going to be losses, but then uh, in the big picture, right, you are going to be profitable. So your losses are going to they're going to be subsided by your profits. That is what I mean. And then it's not instant financial freedom, it's gradual. You understand? But this is what you can expect. I'm going to give guys education. Of course, I'm going to teach you guys. Well, um, trying to make this bootcamp as simple as possible. And I don't want you guys to go through what I went through, so I'm just making it as simple as possible, giving you the important things, right? The important things that you guys need. And there's also going to be a lot of practices, and then you're going to have some losing trades. Also going to have some mistakes. You're going to make some mistakes. You have to be disciplined too. And you're going to learn about risk management, and then we are going to improve continually. Yeah. And some of the guys were talking about me sending signals so they can be earning money alongside learning. Yeah. So we are going to be I'm going to start that on Monday, right? I'm going to be sending you guys some signals. So what that means that you'll be trading with me. So any trade I enter, you guys will also get the opportunity to enter the trade, and then just see how the market works, right? Just see how it works. Just have a feel of um, the market, right? Whilst you are learning, yeah. And then so make sure you are using the HFM link. Even if you don't have an HFM link, you can if you already have an account to HFM, you can text me. We're going to sort things out. It's HFM that's sponsoring this. Yeah, so we good. And then you have to know that your first goal as a beginner shouldn't be how much money can I make, right? That is not what you are doing here. I already told you guys that I'm going to give you the mindset of a trader. The mindset of a profitable trader is not how much money can I make, but how can I become a consistently disciplined trader? Because this will translate into profits. You guys understand that? Now I'm sure some of you want to ask, are trying to ask me, oh, you have a question in your mind that's what's the uh highest amount of money you've made from trading, right? And that is a bad mindset. You shouldn't even be thinking about something like that. But I'm going to give you something that is going to motivate you, yeah. Something that is going to tickle your ear, something that I'm sure you guys would love to hear. So last year, I flipped. When I say flip, it means that uh, I increased my money, right? In a very large percentage, right? The increase of my capital was in a very large percentage. Yeah, I was using a small account and I took it to, I made a lot of money from that small account. Yeah, and the account was a $5 account, and I flipped it from $5 to $100. Yeah, flipped the account from $5 to $100. I'm sure you guys are so excited about hearing this, but like I said, I did this last year. Last year, you see, it doesn't always happen that way. I usually uh, like to build a capital consistency. So I'm not going to disclose the amount of money I've made. I'm going to tell you the craziest flip I've done, which I have proof of $5 to $100. And this year, I also did $30 to $156. Yeah, and then sometimes when I try, it doesn't work. And it's a game of probability. Sometimes it works, sometimes it won't work. Flipping is not something you can be doing consistently, right? Like having a planned risk and then executing your trades. So I don't want you guys to be thinking about making high percentages in one day, but then building consistently, compounding. That should be your mindset. You should be somebody that is thinking long term. Trading is a skill, not a lottery ticket. Remember that. So don't rush to make money. You, you first have to learn how the game works, and then your first investment should be in your knowledge, right? next week we are going to go deeper into how the forex market actually works. We're going to be looking at charting and all that. Yeah. Now, if you guys have any questions, let me know in the comment section. Do you guys have any questions? You need to ask questions. If you don't understand anything, let me know. If you guys are good to, you can end the live streaming. I'm going to post the video on YouTube, maybe, depending on what we do, because you're supposed to be joining the live. Do you guys have any questions? All right. If you guys don't have any questions, we'll meet next week, Tuesday, 9 p.m. GMT. I'm going to post the first video on YouTube very soon. I'm done with this. I'm just doing some touches with the editing. So by tomorrow, definitely it's going to be posted so you guys can watch the video and then enjoy it. That might be the only video I'll post for now. I'm not going to be posting these videos because you guys must be joining the lives. All right, catch you guys next week. Bye. Can I see some WHFM in the chat? Can I see some WHFM in the chat? WHFM, 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 WHFM. WHFM, WHFM in the chat.